Hey everyone, this is Mondragon with PlutusX. Today I'm going to be showing you guys moving averages. Let's just dive right into it. Alright, so moving averages, they're really simple. We got various different types of moving averages. We'll go over the two more commonly used ones. We have a simple moving average and an exponential moving average. So simple moving average. Basically, a simple moving average is calculated by adding the last X period's closed price. You could do closed, open, or whatever, but it's typically using closed. And then dividing it by the number by X. So, for example, if we're in a 1 hour time frame, therefore one candle represents 1 hour, and the periods that we have selected is 14, which is like typically the default period for moving averages, it's going to take the previous 14 1-hour moving candles, the closing price of those candles, and it's going to divide it by that period, which is 14. Similarly, exponential moving averages offer the same solution, however, they give a little bit more weight on the recent periods, hence exponential. So here are the pros and cons for SMAs and EMAs. Simple moving averages, the pros are it displays a smooth chart and eliminates most fakeouts, which is good. However, it's slow moving, which means it may cause a lag in the buying and selling signals. Now EMAs, it's quick moving and is good at showing recent price swings. The con is more prone to cause fakeouts because of its errant signals and the fact that it's more responsive to the market. So here's a moving average, and as an example, as a trend line. So we got a 10 SMA, which is a 10 period SMA, and we're looking at the AUD Swiss franc on the daily chart. So on a daily time frame, we're using a 10 period simple moving average, and we're able to see this being implemented as a dynamic trend line and a dynamic support line. So what happens on the uptrend? We have price right above it, hugging the trend line perfectly, and then when price starts crossing over, look at the crossover right here, we can see a potential shift. And then what happens? Well, it does actually cross over completely, and we create a downtrend, and in the downtrend we see price treating this trend line dynamically as resistance. And then what happens here? We cross over, and then we start creeping into another bullish uptrend. So once again, these moving averages, like everything else, are going to be used in conjunction with your trading strategy and should not be used alone to determine whether or not you should get in or get out of a trade. Alright, let's look at the moving averages together. Two different moving averages, right? We are on a daily chart again. We are USD JAP yen, and we have the 10 SMA and a 20 SMA. Now, the way these strategies work is for the 10 SMA, whenever it's above the 20 SMA, it's typically meaning it's still in a bullish trend line, right? So the 10 SMA is going to be hugging as a dynamic support more closely than the 20 SMA. And whenever the 10 or the blue line is above the 20, that peaches line, that means that there's a high probability that it's still going to be going in that direction as far as an uptrend. Now, if it crosses over, that's a potential region for it to be a reversal, which means the trend can start switching from an uptrend to a downtrend. And after the candle closes and you get a confirmation, you can actually see the blue line start going below the peach line or the 20 SMA, and that signifies that it's actually a downtrend. So these are ways you can implement moving averages into a strategy by using multiple moving averages together in conjunction to create a strategy. And remember, for the most accurate type of trading, it would be best for you to actually use these trading strategies in conjunction with structure support and Fibonacci's and other tools that I'll be teaching you. Remember, we're trying to build a case for entering and exiting a trade. That is imperative for us to do. We cannot just go based off the whim on a single indicator or tool. We have to build a case for it because we want to build a high level of accuracy. The more accurate we can become, the more certainty we have, the less worried we're going to be, and the more money we're going to make. Similarly, the less money we're going to lose. So it's really simple. These are the basic pros and cons of these moving averages. These are the most common moving averages used, the simple and the exponential, both of which have their own benefit. And I actually created a tutorial on TradingView teaching you how to build a moving average strategy and automate it so that you can have profitable signals. Now, this is using fast RSAs, which is a mixture of EMAs and SMAs. But I'm going to be showing you guys a trading strategy once we get to the advanced section of the series, and it's going to be using three moving averages, one simple and one exponential, or two exponential, I believe. And I'm going to be showing you guys how you can use this trading strategy to build a profitable income. So this is one of the many strategies that we've used and implemented. Once again, not every strategy works for every pair or instrument for that matter. And like I said, you want to be using these in conjunction with other trading tools. So you don't want to go based off the whim of one single tool. Remember, your strategy should revolve around multiple tools and indicators, not just a single one by itself, and primarily focus on structure and support. That's it, guys. I would say explore the chart, but honestly, I'm going to be doing a more in-depth tutorial on this with the advanced strategy series. So what I would say is just go on to TradingView, and then on the indicator list, just type in moving averages and just play around with those. So this is a very simple one. Just use the 10 SMA for daily, and just play around with these different moving averages on your chart and figure out which one works best for you, which period works best for which time frame, and which both moving or simple average works best for you and your trading strategy. So just play around with these, and we're going to review them again in greater detail and get more granular on how we could actually apply these moving averages into a profitable trading strategy. That being said, thanks guys. Talk to you guys next time. Bye.